All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you. And the first thing I want to talk about is Bitcoin made me a ton of money, unlike stocks and gold, says Jim Cramer, the host of Mad Money, now shilling that Bitcoin. CNBC host Jim Cramer has revealed he made a ton of money on Bitcoin, but gold let him down. In an episode of the Pomp podcast released on March 22nd, Cramer thanked host Anthony Pompliano for inspiring him to invest $500,000 into Bitcoin. Here's what's going on. You made me a ton of money, he began. Cramer is well known as a mainstream media finance pundit, and he's also familiar to Bitcoiners after a previous Pomp podcast appearance in September 2020. His latest outing, however, puts him in pole position among CNBC presenters when it comes to being bullish on Bitcoin. Continuing, he said that unlike his experience with buying gold and stocks, Bitcoin actually delivered. It happens just as you said, he told Pompliano. It also happened much faster than you said, but I'm very grateful. And you know who else is grateful? My kids, he says. And sure, stocks and gold are all good, but gold has actually been going down for quite a bit. Some people call it manipulation, but I call it probably people selling gold for Bitcoin. And stocks are great too, but the gains, they just ain't no Bitcoin at all. Turning to gold, Cramer updated advice that he claimed to have espoused for almost 30 years. Instead of allocating 10% of one's portfolio to the precious metal, he revealed for the first time that it should now be 5% gold and 5% Bitcoin, which I always find kind of funny because these like millionaires are like, oh yeah, put 5% of your portfolio into such and such, this, that, or the other thing, or Bitcoin, which is great for the average millionaire or close to billionaire that can afford 5% into Bitcoin, and that's like a whole bunch of money to them. But 5% of the average person, I mean, was, like $50 in Bitcoin, but that's not going to help you out too much. It's got to be a lot more for the average person for sure. But thank you, Jim Cramer, anyway, for your shill of Bitcoin. We all appreciate that. Moving on, American news magazine Time to accept crypto for subscriptions. Firm auctions 3 NFT covers. So a job listing posted to LinkedIn shows that Time magazine, the American publishing company, plans to hire a new CFO who understands Bitcoin and blockchain technology. The media industry is undergoing a rapid evolution. The job advert notes Time is seeking a chief financial officer who can help guide its transformation. I'm a chief financial officer. I could barely even pronounce it. But come hire me. I don't know what I'm doing at all when it comes to being a CFO or Time magazine or print. Maybe second thought. I don't know. Just take a look at my resume, Time. It's fine. You make your decision. It's okay. The job offer also states that the interested party must have comfort with Bitcoin and cryptocurrencies. According to the listing's qualification section, additionally, the individual must have over 7 years in executive leadership positions. I can make something up on the resume that looks like 7 years of total leadership position of a gigantic corporation. It's fine. I got this job, guys. It's okay. I'll keep making videos, though. In addition to looking for a CFO who understands Bitcoin, Time is also auctioning off NFT assets based off of iconic cover designs. Let me tell you what design that's not going to be. Just a little oopsie, right? A little hindsight is 2020 on Time's part. Not a big deal. I'll get to that in just a second. Definitely not an NFT cover that they're going to make. And I'll get to it in just a minute. I think some of you may have already know what I'm talking about. Currently, the highest bid for the Is Fiat Dead NFT is 27.5 Ethereum, or roughly 46,000. Great for a JPEG. Amazing. The Time Magazine Special Edition NFT is a repurposed cover from a cover published in April 8th, 1966, called Is God Dead? The typography on the 2 most recent covers needed to be hand-drawn, Time explains the Super Rare auction website, as we could find no modern type foundry that has the exact interpretations of the one used on the original cover. So Time Magazine, getting into Bitcoin, yet another corporation or company or institution getting into Bitcoin. But let me tell you, they might not do right. They have a Time Magazine Man or Woman of the Year. And in 1939, in 1938, it was Adolf Hitler. Whoops. That's probably not going to be an NFT. We're just going to forget about that one. In 1939, it was Stalin. Whoops, right? We made an oopsie. And then we had Winston Churchill and Roosevelt. fair enough, right? And then in 1942, they did it again. You guys did it again, Time Magazine. It was Joseph Stalin again. He killed like 50 million people. It's not good. Oh man, hindsight is 2020. That's harsh, Time Magazine. Not good. Those are definitely not going to be NFTs for sure. Although somebody that watches this video is probably going to put it as an NFT on OpenSea now. I'd find that somewhat humorous, but also sad at the same time. Oops, NFT, Time Magazine, we'll just forget about that one. Probably not going to be an NFT. Robinhood files SEC paperwork for public offering. Oh man, because we all love Robinhood after they totally screwed the retail investors and sell your data to everybody and not let you add or withdraw your cryptocurrency. I think they're planning on changing that, and you can do it soon. But hey, too little too late. You guys were just riding that fiat wave by letting people trade fake cryptocurrency back and forth for a long time. And then you decided after all of the FUD against you that, hey, maybe we should add cryptocurrency, actually add cryptocurrency to our platform, and maybe some of the people that are really, really angry about us will forget what we did to the people. But we're not. Robinhood Markets Incorporated, a popular trading app that recently expanded its cryptocurrency business, has filed paperwork with the SEC to go public. The company confirmed Tuesday that it had confidentially submitted a draft registration statement. I'm sure they had to confidentially do it. Publicly, not so good. Relating to the proposed public offering of its common stock, Form S-1 requires companies to provide more detailed information on the planned use of capital proceeds, probably to screw over the retail investors and then just stop buy orders. And then after they stop buy orders, only allow sell orders, then wait a week, and then only allow people to buy one share of the stock that everybody was looking to buy on Robinhood, so that you just get totally screwed and left high and dry because you're only able to buy one, which isn't able to sustain or pump the price. It's still just going to go down on you. So good job, Robinhood. That was a great decision. If you were looking to screw people over real bad, that's the best. Like, that is the cherry on top, right? First of all, they're letting everybody buy GameStop. Boop, 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 what's going up, right? And then their corporate overlords, their hedge fund overlords who get who pay for your information, right? Because you're not paying for the platform, you're the product. You're the product. Look at this finger pointing at you. You're the product. Ha, right, ha. That's funny. And then they stop sell orders, right? Or they stop buy orders, so they only allow you to sell, right? To force the price to go down, because hedge funds, oh man, they're losing $70 billion. Okay, right? So that's pretty bad. And then they're like, oh, no, it's okay. You can buy one share. You can buy one share of Robinhood. So then people are like, some people are probably like, oh man, I'll go out and buy one share of Robinhood now. Or not Robinhood, of GameStop, sorry. And then the problem is that's definitely not enough volume to actually continue the price upwards, or at least sustain the price sideways at the very least. And so then you just get totally left high and dry by buying a $300 stock, and then the next day it's $200. Excellent, Robinhood. I mean, just souse. I mean, I couldn't have thought of that, right? They are better than me. I could not have thought of that. Just allow the people to buy one stock after the price is falling. Amazing. What evil could have thought about that? I mean, blaming the devil for the things we do is just terrible, right? Anyway, what I hope happens here with Robinhood stock is that that Reddit gets a hold of the GameStop or Robinhood stock and then just completely manipulates the bejesus out of it. I want to see Reddit go ham on Robinhood stock, whether they're pumping it and dumping it or something like that. I want to see them mangle Robinhood stock. It would just be the absolutely perfect irony of all time. It would be absolute sauce. Sugary, molassesy sauce for sure. I want to see that happen. Reddit, get the job done. Destroy Robinhood stock. Moving on, Bitcoin transfer worth $806 million might reveal a big institutional purchase. So digital asset traders and analysts were scrambling Tuesday to assess a fresh data point extracted from the Bitcoin blockchain. Some $806 million worth of cryptocurrency apparently transferred earlier in the day off of the Coinbase Exchange's institutional focused unit, Coinbase Pro. The jury is out on what it means. It could be that a large investor or several just completed a fresh round of buying and are taking the bounty off of the exchange for long-term holding or other purposes, or it might be something else more innocuous, such as just an internal transfer. According to data provided by the blockchain analytics firm CryptoQuant, some 14,666 BTC were moved off the exchange during the early U.S. hours in a small number of transactions. And the transfer came after Bitcoin prices tumbled Monday by most in a month to about 54,000, a level the market hasn't seen in almost 2 weeks. Almost 2 weeks. We're getting a little bit jaded by these price increases on Bitcoin. Almost 2 weeks. We had to wait 3 years basically for a bull run after 2017, and now we're worried about a $6,000 drop to a price that we seen 2 weeks ago. Oh no, right? By Tuesday, the largest crypto had steadied and was changing hands around 55,000. So it's likely that a lot of times these institutions, these companies that are going out and buying a whole bunch, they end up buying them from Coinbase Pro. They buy it off the market from Coinbase Pro and various other markets. That Kraken has like sort of a black market too. And they don't want it actually, legally they may have to be in charge of their own assets. So they'll buy it from Coinbase and then they have to custody it themselves, or maybe they just prefer to custody it themselves. So this is likely what it was. We'll probably find out, perhaps, we may find out who actually bought this. It might be something like, MicroStrategy bought another 806 million, although they usually announce that they're looking to buy far in advance before they actually buy it. So we'll have to see what news comes of this. If it's no news, then it's just secret movement. And that's what Bitcoin's all about too. So moving on here, will Grayscale convert GBTC to a Bitcoin ETF? So right now the market is really relying on a number of things. Of course, the institutions not selling off all of their Bitcoin, including the companies like MicroStrategy and stuff. But one of those institutions is definitely Grayscale, who is currently holding like well over $40 billion worth of assets. And there's a major problem going on right now with Grayscale, and that could be a big gray cloud on the horizon, because Grayscale is certainly one of the institutions responsible for the price being what it is now, as the amount of Bitcoin that they have to buy in order to supply GBTC shares is pretty insane, the amount that they have actually bought. Along with, of course, MicroStrategy and stuff like that. But MicroStrategy is not necessarily an institution, just a company that likes to buy well over billions of dollars worth of Bitcoin. Hey, it happens. But Grayscale is in a little bit of trouble here. The Grayscale Bitcoin Trust, popular way for investors to get exposure to Bitcoin in the form of shares, which is unfortunate, has now had a negative premium for an entire month. This means that the price of each share remains below the corresponding amount of Bitcoin it represents. So it's a good buy. The only problem is when you buy from Grayscale, your investment is locked up for 6 months. And then when it gets unlocked, you're sort of left high and dry with this premium that's even lower than when you bought it. And so essentially, it's like buying a different form of Bitcoin, and then when you go to cash it out, that Bitcoin is actually worth less than the current actual real Bitcoin, and that's kind of a problem. So this negative premium is new terrain for Grayscale's institutional investors, because it has been doing nothing but going up, except for the last month. In the past, those wealthy investors have purchased shares in the trust in order to engage in a form of arbitrage, flipping them to retail investors at a profit months later, once a regulatory lockup period expired. So usually by the time the lockup period expires, the last one I know of was February 3rd. And so the price was going down until February 3rd. Several days after February 3rd, we've seen an increase in price, and the premium did not get to where it normally gets to, and has since sort of been falling. So usually prices fall towards the lockup period. Once the lockup period ends, new investors come in and pump up the premium, and that's the way it's been going on for quite a while now. Now, the negative premium appears to be the cause of a recent collapse of inflows into GBTC, as Bitcoin lending firm BlockFi told the What Bitcoin Did podcast, one would have to be a complete moron to subscribe to create new shares of GBTC, while the liquid shares are trading at a discount. So you'd be a complete moron to buy GBTC right now. He suggested investors might as well buy the shares on the open market if they want to buy any. BlockFi itself has purchased significant portions of GBTC shares in the past, but now the new negative premium not only eliminates the arbitrage opportunity, it makes the shares themselves a shaky investment, especially in the light of Grayscale charging an annual 2% fee to obtain and package the underlying Bitcoin. In fact, a report by crypto insights platform ByteTree stated that if the negative premium remains and the selling pressure increases, this could morph into a systemic risk. I agree. This is, again, a big old dark rain cloud, lightning cloud on the horizon. A storm's a brewing. The reason behind this is the sheer size of Grayscale Bitcoin Trust, which currently holds 655,000 Bitcoin. So they have to hold Bitcoin in custody, actual Bitcoin. And then when investors come along, what they're doing, instead of just splitting up the Satoshis, which they should do, but they don't make enough money doing that. So basically what institutions do is make derivatives of Bitcoin. And this in the future, I believe, is only going to increase. You say there's only 21 million Bitcoin. There's only 21 million Bitcoin. And surely you could also argue that there's a lot more Satoshis than there is just 21 million Bitcoin. However, that's not going to be enough. Eventually, all that's going to run out, and it's going to get bought up. So what institutions are going to do is create derivatives like GBTC. So they can take one Bitcoin and split it up at $20 a share and put a whole bunch into that one price of Bitcoin, so that you're able to essentially take a Bitcoin and split it up, not by doing Satoshis, but by putting it as a stock, as a derivative of Bitcoin. And that's sort of a major problem. That is the big problem with Grayscale, although they have, of course, obviously pumped the price by buying 655,000 Bitcoin. So as a result, Grayscale is trying to return the price of shares to its net asset value. Its parent company, Digital Currency Group, announced on March 10th that it plans to purchase up to 250 million of GBTC shares with its own cash, helping to stimulate demand. That's not going to be enough, because they have well over $40 billion in cryptocurrency assets, so 250 million is a drop in the bucket at this point. Grayscale has a tremendous incentive to get the liquid shares back to net asset value or a premium, because otherwise their spigot of new subscriptions is completely shut down. Not so good. That's why you haven't seen a lot of news on my channel lately of Grayscale buying, a new 12,000 Bitcoin. Grayscale buys 15,000 additional Bitcoin. Well, they bought some Ethereum lately, but you haven't really seen too much news about Grayscale buying a whole bunch of Bitcoin lately, have you? This is the reason why. But the cause of the premium could also be a way for Grayscale to get out of this pickle. As reported, the block, a report by JP Morgan suggested that the recent launches of 2 Bitcoin ETFs in Canada have drawn investment away from GBTC, because an ETF, far better than Bitcoin derivatives. Meanwhile, institutional investors who have unloaded shares in order to collect on the arbitrage opportunity have dragged prices down. Other Bitcoin trusts offering lower fees have also emerged in the U.S., like Osprey Funds and Skybridge Capital. Prince pointed out that there are also some ETFs like ARK-W, which holds GBTC shares. So when ARK-W has outflows, it's forced to sell GBTC, adding to the selling pressure. But it's the ETF competition that brings about an opportunity for Grayscale. So the Grayscale Bitcoin Trust was formed because the SEC has not granted any company permission to create a Bitcoin ETF. We got one in Brazil. We got several in Canada. None in the U.S. I think when the U.S. gets its first Bitcoin ETF, it's, I think, going to quickly, within a week, become the biggest ETF in the world. And we're going to see some serious Bitcoin movement. It has repeatedly delayed ETF applications, claiming, among other reasons, the Bitcoin market was not ready yet. Like Bitcoin ETF, the Grayscale Bitcoin Trust was formed as a way to let institutional investors get exposure to the price of Bitcoin without actually owning Bitcoin itself. Because who wants to own their own Bitcoin, right? Oh, so boring. However, the main drawback is that, unlike an ETF, the trust doesn't allow investors to sell their shares to Grayscale and receive the underlying Bitcoin back. There is currently, for the Grayscale Trust at least, no redemption mechanism. So things can go in, but they can't come out. With a redemption process, there's no way for GBTC owners to swap their shares for Bitcoin. This friction point prevents investors or markets from returning the shares to the price of the underlying Bitcoin. And that's why Grayscale appears to be looking to create a Bitcoin ETF. So there are hints that Grayscale is planning to introduce some form of Bitcoin ETF with multiple job filing on its careers page, seeking to fill roles for ETF specialists. Grayscale's CEO Michael Sonnenschein told Decrypt that if Bitcoin ETFs and other digital currency ETFs were to be allowed by the SEC, it's a safe way to say that Grayscale would be very interested in operating a fund that draws on our history of operational excellence to meet what we anticipate would be a surge in investor demand. So trying to make an ETF, there is some more to this article. Again, the articles are all in the description below. But basically, at this point, Grayscale's in a little bit of trouble. If they don't get that premium up, there's going to be a bad wave in the world of Bitcoin. If Grayscale is forced to liquidate a bunch of these shares because the premium is just so low, they're not getting new investors in, the price of BTC is going to be in some serious trouble for at least for seemingly quite a while. But if a Bitcoin ETF can come along and they can sort of transition this whole mess that they got in of Bitcoin derivatives into an ETF, which is actual real Bitcoin moving back and forth, then it's a different story. So moving on here to CoinMarketCap, $1.7 trillion market cap. We are sinking a little bit. Nothing really good going on in the market right now. Honestly, a little bit more FUD than there is good in the market. However, one cryptocurrency made its way into the top 10 just poof suddenly, and that is Theta. And of course, Theta's been around for quite a while, but there's also some questionable aspects of Theta. Of course, Theta has some fairly good partnerships. I think they have a Sony. Lionsgate wants to stream movies using Theta. Theta sort of uses everybody's internet that is participating in it, and they use some bandwidth of your internet if you have free bandwidth to help out others, and you make coin doing that, like Theta Fuel. And they also have Theta.tv, which is a streaming platform. However, I suppose I've heard from people that they think that the Theta.tv streaming website is merely just sort of a promotion, more of like just a show of what Theta can do. Because Theta, for some reason, is a top 10 coin right now. And if you go to Theta.tv, you might question, why is this coin a top 10 coin? Because there's maybe 100 streamers and possibly maybe 1,000 viewers. The website is also very poorly organized and managed, in my opinion. It's very bad. So they are no competition to Twitch or anything like that. But the only thing I question about the whole streaming thing aspect of Theta, in terms of Theta.tv, like a gaming streaming site, is the fact that DLive was definitely a failure. I streamed on DLive for a little while, and it was good for a little while, and then sort of just went downhill very quickly. I think it still exists, but there's not much incentive to stream on it. Things like BitChute, DTube, and those other streaming platforms and video sites did not do particularly well. So don't get me wrong, I like the decentralized aspect of cryptocurrency and video storage and things like that, like Libri and DTube and BitChute and all of those. The only problem is they do very, very, very poorly, to say the least. The idea is that they pay you in a cryptocurrency that they pretty much poofed into thin air. And the problem with that is that there's no incentive for anybody to buy it. There's just incentive for content creators to slap content on there haphazardly and then sell their tokens as they get them. There's really no reason to hodl the tokens. There's no reason for people to buy the tokens. In my opinion, there's not much incentive to buy. So it's just really made to dump, and they don't do so good. And also, another idea is concept, I suppose, is that if you Google anything, obviously Google is going to cache YouTube videos and other videos like that that you're looking up first. So there's no way that you're going to end up on BitChute or something like that because something isn't on YouTube. There's very little that's on those platforms, and I fear that Theta right now is in just a total FOMO phase, and people are going to realize at some point. Who knows? Maybe it'll stay in the spot and it'll be a huge coin. Some people are saying maybe $50 one day. It could be a huge coin one day. Who knows? But I really don't like, other competition in terms of streaming platforms with cryptocurrency. It just, so far, it hasn't worked. I hope it works with Theta.tv. Maybe I'll give it a try streaming on it. But they always just seem like the coin that is given out to streamers or content creators is really just made to dump. And there's not much reason as just a retail investor like you or me or something like that, if you're not streaming or not putting content on these platforms, to actually buy the coin, because it's just all the content creators are just dumping it on you the whole time. There's no ad revenue. They really need ad revenue in it and stuff like that as well. Just to add additional money into the system, so they're not just paying somebody in a currency that they just basically made up on the spot. But that's all I have for you guys today. Make sure you like, share, subscribe to the channel. Helps me out a lot. Social media in the description below. Also, channel memberships are active. Hit the join button. Become a member. You get a badge. You look 32% cooler when you comment on the channel. When you have that badge, it helps out the channel as well. But that's all I have for you guys. As usual, I'll see you next time.